traders from across the globe, and welcome to the 1502nd edition of Short-Term Trading Live with Oscar Carboni. Good evening, traders. This 1502nd edition is coming to you on a Monday night for Trading Tuesday. It is about short-term trading, and for trading on Tuesday, right off the bat, I'm going to tell you we're going to start off the U.S. indices, emini, S&P, NASDAQ, Russell. We're starting off with a neutral, but the likelihood is we're starting off neutral, but we'll probably end up buying the dips in the emini, S&P, NASDAQ, Russell. One of the three, if not at least two of them. Traders, as you know, futures trading is extremely risky, causes substantial financial loss. It's certainly not suited for all traders. You must have risk capital to lose. And more importantly, you must know that a stop is your best friend in this industry. It is about the only thing that will save you when you fail to save yourself. We've all been there. Put your stop in, put it in first, let it knock you out of a bad trade if it needs to. Traders, don't trade alone. Come on down to livewithoscar.com. Come into my free trading room. I am at the helm. I am on camera and microphone. I am there to help teach you the art of technical analysis and help keep you calm during the day and night in these crazy markets. It's free. Livewithoscar.com. Join our community. We've got an army of OMNIacs building there. Come join us. All right, traders. So what is on the board? Indices remain in the Oscarism known as the F flags. Indices remain inside F flags, making us buyers of dips if the market dips into a nice place. Gold, hands off for Trading Tuesday. I'll show you the chart. I'll show you why. No trading gold on Tuesday. We'll pick it up Tuesday night and see what it looks like for Tuesday into Wednesday. Crude oil and beans are short-term bullish. Got a nice signal, you can't deny them. So while beans is bouncing off the 200 bar moving average and while crude is bouncing off one of my OMNI averages, hey, maybe we'll take advantage of a quick long trade. Short-term trading here. Overall, we've been bearish crude, but it's been going up a few days and we're not blind, so we're going to take advantage of some upside possibly. Same thing in the crude oil, in the soybeans. And then novices wanted. Do you consider yourself a novice when it comes to technical analysis? Can you pull up a simple daily chart? If you can do that, you are who I am looking for. Novices wanted. For what? OmniCamp. There's 2 open seats, and I am reserving them for novices. I've got lots of applications. I keep blowing those applications off because I want some guys that have not been jaded by technical analysis. They've learned for 20 years. I don't want an old dog and try to teach them new tricks. I want you novices. I can teach you like that. When you're a novice, you're not pre-jaded. You don't have that proverbial bad golf swing. You are not going to get caught up in these emotions of things you thought you knew 20 years ago. If you're new at this, I can help you start to build your foundation, a firm foundation, and on a firm technical analysis foundation, you can build a skyscraper. If that sounds interesting to you, come down to livewithoscar.com and stay with me. A 4-day training session held here live in Las Vegas called OmniCamp. I've got 2 open seats. OmniCamp is September 9th, 10th, 11th, and 12th. Only 6 of you are allowed to come out. This is very exclusive. It's very small. It is a small fraternity. Now, when you come to Vegas, your food, your lodging, your schooling, everything is included. Give me a call, 702-629-4755, or come down to livewithoscar.com. Novices wanted. Fill out your OmniCamp application, and I'll call you back and see if you qualify for an OmniCamp. All right, traders, so I'm about to show you some charts with the F flags, where we stand inside of the F flags in your U.S. indices, why I am calling gold hands off for Tuesday, and why we see short-term bullishness in the beans and crude. With no further ado, let's go look at some charts. Traders, the first chart this evening, E-mini S&P daily bar chart. Remember, for short-term trading, this is what's considered an F flag. It's an Oscarism. It's something I've worked on for many years, but it's called an F flag. Now, you might note here that we did fall out of the F flag, but only for a day and a half, and then boom, right back in. We are inside of the F flag and willing to buy dips anywhere in here for trading on, what was it, Tuesday or Wednesday?
Tuesday.
For trading on Tuesday. I never know what day it is. So, we're looking at the E-mini S&P. We are in the F flag, and we are looking to buy dips. Then you take a look at your NASDAQ, and there's no reason why you shouldn't think the same. But once again, interesting, see how it only came down for just a day and a half? And then we were back in it, and back in it, and back in it. And so it stayed inside the F flag. It only got violated a little bit, went right back in. Do not fall in love with the downside. Then there's gold. Why am I saying that we're hands off? Look at where gold is. Each time it's come down and hit this support line, it has bounced, hit the support line, bounced, hit the support line, bounced. So we're right here. Do we want to sell it? Well, if it settles below this line again tomorrow, then probably we will become sellers. If in fact we get back up in here like you've seen in those F flags, well then you'll be glad you did nothing for trading on Tuesday. So don't forget, we don't know if it's going to hold or not. We think it probably will hold, but there is no trading on Tuesday in gold. We'll pick it up Tuesday night into Wednesday. Then you've got crude oil traders. Now, the hunt has been on for crude, and I've been telling you about crude oil, and we're shorting crude oil, and that worked for quite some time. But lately, as you can see, we've had a couple of up days. Now, this is a weekly bar chart, so this is a long period here. I don't expect all that much out of it, but I will show you something about this weekly chart. This average, when you got under it, you broke really hard, got back to it, could not get above. You see, you broke hard, got to it, couldn't get above, broke, got to it, couldn't get above, broke, got to it, and then things changed. You ricocheted around a little and got above, and look what we did when we bounced right from here. We bounced right off the line, and now we're back up here. So you've got to be a buyer of dips at least for a couple of days looking at that if you're a short-term trader. Longer term, we do know this, bounces get sold. Bounces get sold. A bounce will get sold. But let's see where it wants to go first. So for short-term trading, we will buy the dips in crude oil. And then you've got another little shining star here. Traders, look at the soybeans. Now, as you know, we were bearish and doing our best to try to sell into this mess all the way down here. But this is the 200 bar moving average. Watched by fund managers all over the planet. This is zoomed out really far so you can see a lot of bars. And you'll note that you get up to that 200 bar moving average and you crack. And you get back to that 200 and you crack. And you get back to the 200, ricochet around a little, and look what happens next. We've come all the way back, hit the 200, went a little below it, and since then we've been rallying off of it, and we're here. So I am not going to say that this doesn't come next, not unless we falter and get back below the 200. For now, for short term, we are buying the dips in your soybeans. And let me just get a little closer on this chart for you. Let me zoom in now. That doesn't look terrible right there. It was a bear flag, which seemed to have failed. You've got two bars outside the flag right now. So let's call it not a bear flag, and let's call it a hold of the 200 bar moving average, which is what I'm going to call it now because the bear flag is not producing, so we say that's not exactly what it was. And instead we've bounced off the 200 bar moving average. We're here now. We like buying the dips at least for trading on Tuesday in your soybeans. Traders, come on down to livewithoscar.com and meet me in my free trading chat room. Traders, so you've seen the charts. Novices, contact me. I will fix you. A couple of seats left open. This is your opportunity to start off on the right foot. Call me, 702-629-4755, or fill out your OmniCamp application at livewithoscar.com. All right, traders, you've seen the charts. You've got my technical argument for why we are hands off in gold. We like buying dips in the E-mini S&P if we trade anything at all there. And short-term bullish in beans and crude. Traders, keep your emotions out of trading. One of the best things you can do to help keep those emotions at bay, and I know it's not easy in this crazy environment, but try this out. Say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stop trade.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.